U.S. stocks plunged on Monday, with the Dow suffering its biggest one-day intraday point fall before ending the day down 4.6%. The broad S&P 500 shed 4.1%, its worst percentage loss since August 2011. The tech-heavy Nasdaq Composite lost 3.8% by the close. U.S. stock futures were pointing to another day of heavy losses for U.S. markets on Tuesday, with Dow futures down 623 points at 23,315 and S&P 500 futures down 50 points at 2569, while Nasdaq futures were down 45.75 at 6383.4. So long markets have been used to low interest rates and low bond yields. Now we've seen the U.S. economy turn up and the market is adjusting, said Mr. Oliver. The overnight drop in the U.S. markets was pretty amazing, said Matthew Sherwood at Perpetual Investments. In the last few weeks, investors have been given a potent reminder of the power of the bond market, he said. How the market moved on Tuesday.Still, the moves in the U.S. markets should serve as a reminder to investors of what can happen when a decade of central bank stimulus is withdrawn and highlight the need to find sources of diversification such as safe haven currencies, Mr. Sherwood said. Financials were the worst performers by sector in Australia on Tuesday, losing 3.3% as CBA shares dropped 3% to $77.40 and Westpac fell 3.1% to $30.33. Macquarie ended the day down 5.3% to $97.88 and Magellan fell 6.4% to $25.21. Resource sector stocks also saw heavy selling, with BHP falling 2.7% to $2.72, while Woodside dropped 3.9% to $32.04. Evolution Mining was among a handful of outperformers on a day of market carnage, with the gold miner broadly flat on the day to end the session at $2.83. Gold miners were among the very few stocks to escape heavy selling, with Northern Star ending the day at $5.79 also after a flat performance.Gold prices held steady on Tuesday, buoyed by a tumble in global equity markets but pressured by expectations for more U.S. interest rate hikes this year. The U.S. Federal Reserve last week held interest rates unchanged but raised its inflation outlook and flagged further gradual rate increases. Spot gold was largely unchanged at $1,339 an ounce after rising 0.5% on Monday. Retail spending was more sluggish than expected in December, following a surprisingly strong lift in November. For the final month of 2017, retail spending slipped 0.5% to $26.2 billion, seasonally adjusted, the Australian Bureau of Statistics said on Tuesday. The market had expected a dip of 0.2% after 3 straight months of growth that included a 1.3% rise in November thanks to the release of the iPhone X and Black Friday sales. Australia slipped to a heavy trade deficit in December after imports surged during the month. The trade balance for the month fell to a deficit of $1.36 billion, down from a revised $36 million surplus in November and against market expectations for a surplus of $200 million. Exports were up by $510 million or 2.0% for the month, led mainly by an increase in shipments of iron ore and coal. However, Imports jumped by $1.9 billion or 6.0% during the month. The Australian dollar was on the defensive on Tuesday as a rout in global share markets sparked a flight to safe havens, while local economic data proved too mixed to offer much support. The Reserve Bank of Australia went out of its way not to rock any boats, leaving interest rates unchanged as expected at its monthly meeting and omitting any mention of the ructions in markets. The Aussie was down 0.1% at US 78.84 cents after slipping 0.5% overnight. That came on top of a 1.5% dive on Friday when world stock markets took fright. Asian stocks plunged for a second day after the frantic sell-off in US equity markets. Japan's equity benchmarks plummeted, with the Nikkei down 6% at 21,327. Volatility on the Nikkei 225 stock average spiked the most since 2015 as trading volume was more than doubled the 30-day average. Hong Kong's Hang Seng Index dropped 4.3% to 30,852, while China's CSI 300 index fell to